Hello, and welcome to the Present Fathers Podcast, the podcast that explores climbing the mountain of fatherhood together. My name is George. I'm joined by Dustin, Justin, and Brandon. And in tonight's episode, we will be discussing investing centered around the book called The Psychology of Money. The host for tonight will be Dustin leading the discussion. So without further ado, I will turn it over to him.
Awesome. How's everybody doing tonight?
All right.
Doing good.
I'm excited.
Good. All right. Awesome. So this is a book by Morgan Housel. I want to say it was the #1 New York Times bestseller for a long time. So it really had a huge impact on a lot of people. Really, really great read. A lot of fun. His writing style is awesome. And a lot of interesting points in there that I hadn't seen previously. So really, really good read. Luckily for you, we're going to go over the key points, so you don't have to read it if you don't want to. But all these guys are nice enough to look at the notes, read the book, and kind of get through the whole process. So we'll talk it out. And guys, like I said earlier, interrupt me. If I use any verbiage or any jargon that doesn't make sense, there's no benefit to that, right? I'm trying to be as plain spoken as possible. So that's kind of the idea there. My grandfather has been an investment counselor for the better part of 60 years. So it's kind of in my blood. I love this stuff. I'm really passionate about it, and I think it's a lot of fun. I think a lot of other people got really interested in the past couple of years too with the meme stocks, AMC, Bitcoin, Tesla, all that kind of stuff, really got people excited about investing in stocks and all that kind of stuff. But a lot of us didn't really know what the heck we were doing. So it was fun a couple of years ago, and now that the market is tanking, yeah, exactly. It's a little bit less fun unless you were short the market, meaning you bought puts against companies. You weren't making money. Bonds have gone down, stocks have gone down. Real estate's held up okay, but pretty much everything else has really struggled. So a lot of the key points in this book are more relevant than ever. Everyone's a genius in a bull market, which means when the market is going up, but in a bear market, which means the market is going down, that's when you really start to see how hard it is to hold on to your money. It's pretty easy to make money. It's pretty hard to hold on to it. So that's kind of the idea there. So number one thing, you'll hear this from any podcast involving, talking about finances. This is not financial advice. I'm not a financial advisor. This is purely for entertainment purposes. Do not, take any of this as financial advice, because it is absolutely not. Don't want any of us getting sued over this. So NFA, not financial advice. Number one thing. So as far as working with investing, for most of us, it may be where you have the majority of your money. If you own a home, that is an amazing thing that you should definitely aim for. The American government has done everything it can to make homeowning the best deal on the planet. Finances are low. You can get a home for 3% down here. So if you buy a $100,000 home, you only need $3,000. You need a little more than that for closing costs and all that. But in theory, your actual down payment is only a very small amount of money. Other countries are not like that. You need 25, 30, 50% down. So if you want a $100,000 house, you need 50 grand. Much, much harder to buy a house. So Uncle Sam is doing his best. Happy 4th, by the way, gentlemen.
Right.
America. Uncle Sam is doing his best to try to get you to buy a home. If you're a father, it's a great goal to own a home. There's so many benefits to it as far as taxes, everything. That's number one. Beyond that, though, you're going to be investing. Now, that may be in stocks, which is where you own a piece of a company. Whether that's Apple or Microsoft or one of the big ones. That's owning a stock, or you might own a bond, which is the debt for either a company or even the government, right? I remember when I was a kid, there were paper savings bonds. I don't know if you guys ever got any of those when you were a kid, but that's a gift that I got pretty regularly, and it was really fun. You'd wait 20 years, and you doubled your money. You were like, yes, I got $50 since I only had 25 before, so it was pretty cool. Those are your kind of simplest investing options. I'm going to talk about a couple of other ones called alternative investments. You can own different kinds of currencies. You can own a Chinese yuan, a Russian ruble. I wouldn't recommend it, but you can. Or you can own a euro. You can own a US dollar. You can invest in currencies that way. They're not really investments, though, right? They're meant to be spent. So generally speaking, that's not kind of the direction you want to go as far as that. But other fun alternative investments that are a little more beyond just your stocks and bonds. So first thing to talk about here is men are much more likely than women, even dads, even when you have kids and you got people to take care of, to be gambling addicts. And gambling is not just going to the casino and putting it all on red, right? Gambling can be going on Robinhood, which, if you haven't heard of, is a very popular, exactly, app. It's mobile first. They did an amazing job. They went viral of getting people to sign into their app, and a lot of people got access to more money than they ever had. If you don't know what leverage is, I'll describe that quickly for you. If I have $10 and I buy $10 worth of stock, there's no leverage on that, right? But if I buy an option, I'm giving myself the right to buy more shares of that stock for a certain period of time. What that means is if I buy an option to own a certain amount of Tesla until August, let's say, if I'm correct, I make a ton of money, right? Because I have 100 times more shares than if I just bought the one. But if I'm wrong, I lose all my money. And 90% of options or more end up expiring worthless. So your chance of actually making money on an option is relatively low. Advanced traders who spend their whole lives learning this stuff still mostly lose all their money. It's there's a few very special people out there, like Rain Man, who can make money, with leverage on an options. Betting, you're not one of them. I know I'm not, and we're all pretty smart guys. So stay away from it. It's not worth it. You already have leverage on your home, right? When you buy your house at 3% down, and the house goes up, by 10%, well, you're up, 300%, right? You're up a lot more. So if you don't outright own your home, you already have leverage on that. You don't need leverage with your stocks and bonds, right?
Makes sense.
So all that being said, go ahead.
I feel like that's literally the option of putting all your eggs in one basket when you do that. So
yeah,
it kind of goes against the golden rule there.
Yep, exactly. Yeah,
I was about to say,
diversification is super important, right? Because the number one thing is you don't want to blow up. You never want to be in a situation where you can't feed your family. That's just an unacceptable situation to be in. So no matter how good something looks, don't put it all in, because you never know. You might lose it all, and then your wife's going to be mad at you. Your kids are going to hate you. So it's not good. You always want to have some money in the bank to protect yourself. So all that being said, if you have a tendency to be a gambler, if you know from a previous time that you went to Vegas and you just could not push yourself away from the table, you were having too much fun, you lost money, and you went back to the ATM, got more because you knew you were going to get that money back. I'm going to win it back all in one time. Investing may not be for you, right? It hits all those dopamine centers. It's really exciting to buy stocks and bonds and to play the market, and know yourself and be smart about it, because if you are a gambler, you're going to lose everything. I have friends that have this issue, and there's a solution for that. Give your money to somebody else. Let a financial advisor take care of it, and let someone else, whether it's your wife or a professional, let someone else take care of it. Do not put yourself in a situation where your emotions allow you to lose too much money, right? You work way too hard. You spent too much time trying to get that money. Do not throw it away, right? Investing is for long-term growth of your capital, and allowing you to live comfortably in your retirement and maybe give something to your kids. It is not for gambling and throwing away, right? This is your money. You worked hard for it. Don't gamble it away.
And
don't give it to your wife.
I was going to say cryptocurrency is even worse for that, because there's faster results because it's so volatile. Mm-hmm. So yeah, there's a lot of issues with people that have addictive behaviors and their personalities going into crypto thinking, oh man, I'm going to buy $20 worth and get rich. And it's like, no, that train's passed a long time ago. Yeah, so you got to be smart about your investment.
And it's 24/7. You can trade at 3 a.m. on Saturday morning if you want. And nothing good happens at 3 a.m. on Saturday morning when it comes to trading cryptocurrency. It's not going to go well. Yeah, that's a great point. There's newer and more exciting financial instruments, being created every day. And if you don't know a whole lot about it, don't play that game. It's not worth it.
Yeah.
Learn about it, paper trade it. Paper trading means you're not using any real money. There's a lot of different apps that'll allow you to pretend you have $1 million in the bank, and then you can watch as it all goes to zero. And you can go, man, I'm really glad that wasn't real money.
Yeah. It's like playing Monopoly, basically.
Yeah. If you're a gambler and you really love it, paper trade, right?
Yeah.
Do fake money. And if you're crushing it and 10 years later you have $100 million, maybe you have a gift. Maybe you're the Rain Man. You're not, but you might be.
Yeah.
So
So
so please don't gamble.
You brought up one point that I think ties really good into fatherhood too, because this is obviously a very intense topic, very focused on investing and money, and that that on the surface, well, what does that have to do with fatherhood? But you talked about it's a long-term growth, right? And ideally, where you want to get to is being able to leave it to your children, or some to your children, or pay for their college, things like that. That's a huge part of being a father, and that's a huge part of being a man is your legacy. And that doesn't necessarily mean like your offspring, but it's what you do on this earth that goes, carries forward after you're gone. Once I'm dead and gone, what impact do I leave on those around me, especially my children and my spouse if she's surviving me? And money is we live in a world that runs on money, so like that's a very impactful thing you can leave behind for your family. And just like bringing up my wife's example, her grandfather. He retired as a colonel from the Army after Vietnam, and was just very good with his money. I don't know if he paid someone to do it or he was just good at it. But he built up nest eggs for every single grandchild he had, college funds. Like my wife is still tapping into that money for school today, and we're in our 30s. And I mean, just the foresight he had, like they were like infants, and he was already setting up accounts and pocketing this money for them. And he died a long time ago, and his wife is still living off of their retirement. So, what a legacy, right? He's helped fund 6 different grandkids now through college, and his wife is still living off their. So, I mean that is very impactful as a father, I think. So, on the surface level, don't think of this as like this is like some Wall Street podcast or something, or Mad Money with whatever that guy's name is, Kramer.
Kramer, yeah.
This I think is a maybe one of the most overlooked aspects about fatherhood. Maybe because then, admittedly, I'm not very good at this, or probably should be a lot better. So I'm going off on a tangent here, but just I wanted to drive that home early on in this podcast today. That this is, make no mistake, it's about fatherhood, and your legacy is important to that.
Yeah, and providership, like you said, is so vital, and not just that, but like I think the staggering percentage is like close to 60 or 70% of all marriages end in divorce due to financial hardship. So as a father and as the leader of the household, it's our jobs to protect our marriage financially too.
Yep. And your wife will put up with a lot, but she's not going to put up with you if you're broke. Not for long.
Right. So it's something that's just
it is what it is.
It helps to have food,
Yeah, exactly.
Yeah, it's so vital. And one other thing I want to touch on too, as far as the legacy, it's extremely, extremely important to know that you're going to give this to them while you're still alive, so that you get to watch the blessings occur. Like I hear so many families, like grandparents and great grandparents, say, when we pass away, you'll get X amount of dollars, and it's like, why would you squander seeing the blessing? But I know that's another subject for another night. But if you do it right, you'll get to see the blessings, real time. And I think that's just something that's so important as a provider and as a dad. So
yeah.
In
absolutely. My wife's case, he passed away kind of early, and they were all still like she was the oldest and was still in high school, so that she didn't have anything to use it on yet. But yeah, I mean, it was there for them the second they were going to be college age and stuff. So
yeah.
Justin,
so what money does, it can give you a legacy. It can help solve problems for you. A lot of young men are in jail because they didn't have $5,000 to get out, to get bail. I mean, it's very simple, so you got a car problem, you can't fix it, now you can't get to work, you get fired. If you had $5,000 in the bank to fix that, you get the car fixed, you keep your job. Money makes a lot of problems go away. It can create more problems, which is another issue entirely, but generally speaking, that's what money's for. It solves problems, and it gives you access to your time, right? Freedom of your time is really the only thing that can make you happy about money. Having a Lambo, having a slightly bigger house, none of that stuff leads to long-term happiness. But having control over your time is the number one indicator of whether you're going to be happy or not. So
I don't know. I can cry pretty easily in a Lambo.
Yeah, that's right.
Yeah, I'm right doing that.
I forget who he is, but he's like, they say money can't buy happiness, but it can buy a jet ski. Try not smiling on a jet ski. You can't. It's impossible. It's amazing. Yeah. So we joke about it, but in all seriousness, all the psychological studies, show time and time again above a certain point. If you're dead broke, it's very hard to be happy in that kind of situation. But above, a minimum kind of middle class amount of money, having $10 million is not going to make you happier than having 5 million. It just doesn't, So control of your time is really the key one. So again, back to the gambling stuff, remain 100% sober when you're even viewing your assets. If you have a beer in your hand, do not look at your portfolio. It doesn't exist, right? The only time you're allowed to look at your portfolio is when you are 100% sober. I'm not going to give any advice towards personal finances, debt, the Susie Orman kind of stuff. That's a whole different discussion. What I will say, though, is if you have serious debt, if you have credit card debt, if you have high interest debt, anything over 15, 20%, pay that first, especially in this market. I'm sure you guys have seen how bad stocks are getting hit. We're all talking about recession. You are not going to outperform your debt load by investing. Yeah. Meaning if you have to pay 15% back on your credit card, you're not going to make 15% this year on stocks to make up for it, right? Right. That it might have been a little different a couple of years ago. The market was going crazy. You go, having a little debt is not the end of the world because it gives me access to capital so I can invest. It's really not the case here anymore. Now is a good time to pay off debt and be smart about stuff because there's not a whole lot of insane, to the moon type of opportunities going on right now. You're probably better off paying off that debt, at least for the next couple of years. We'll see. I could be totally wrong about that. Market could shoot up tomorrow, but doesn't look like it's going that way.
Total. The best book for that, by the way, I'm sorry to interject there, but Total Money Makeover by Dave Ramsey is a fantastic start for anybody that's in debt. It starts with baby steps, and I think there's 12 different steps, and it primarily just works on getting a snowball effect happening for your debt. And man, when you start seeing real actionable results, just like with working out or anything else in life, you really start to get into it and you start getting passionate about it. And it just, his book goes to the psychology as well. So it's a fantastic book.
It's a great feeling. It's exciting. I mean, it's kind of like, our ancestors were indentured servants brought over on boats, and they literally had to work until their debt was gone, and then they were free. And in a lot of ways, student debt's not that different, right? I mean, when you finally get rid of that student debt, it feels like your indentured servitude is finally over with. So that's, go ahead, George.
Hey, I was going to say, Justin, I think, had something he wanted to bring up.
Oh, yeah. What do you got, Justin?
So I was joking about it. I said, don't give your money to your wife. But actually, like my wife's not the problem. Don't get me wrong. But in previous relationships, I'm not going to name names, because I don't want to get sued. But let's just say that allowing certain people to have a hold of your finances is not a good thing, man. And you talked about addictive personalities. Sometimes these folks who are closest to you are the ones who are addicted to something. They hide it from you very well, or they go and just spend because they think money grows on trees, or I don't know, just whatever mind frame they're in that allows them to just go spend. So you need to be careful who you trust with your money, even if it's a spouse. You need to be careful how you spend your money. And then, as a dad, you also have to be careful who you trust with your money.
Yeah.
Thankfully, my father-in-law is an investor, and my brother-in-law, and they both know their shit very, very well. And they take care of, my wife and I's money. But, there's investors out there who will 100% run away with your money. So you have to be very cautious as to who you choose, and, go with somebody reputable and try to find somebody that, has been used by a friend or a family member. Because like I said, there are wolves out there, man, and they are in sheep's clothing.
Yep. And if you have money, you're a big target. People know it. They see you got a nice house. They're not dumb. They know you got some money. So absolutely. It's that is a super important. And so the term fiduciary, if you haven't heard that before, it's kind of a funny word, basically means that the person is legally and morally obligated to take care of your money, right? So if you give your money to a broker, they can do whatever they want. They can say, hey, you should buy this Rocket stock. It's going to be great. Right? Well, what you don't know is they're getting 5% of everyone that buys that money, right? Like Wolf of Wall Street. Yeah. And that rocket goes straight down. Wah, wah. Exactly. Right. So you're better off with a fiduciary if you are going to have a professional manage your money. And that just means that's someone whose entire job is to make sure you don't lose your money, right? They'll talk about your goals, all that kind of stuff, and make sure that it's well taken care of. That being said, it's an expensive service. I personally... have seen 2 to 3% per year of all of your assets that you have to pay to this financial advisor if you want them, to take care of your money. If you got a family friend you trust, whatever, more power to you. But if you go with, you kind of stock professional, your Ameriprizes, those kinds of guys, They're going to take 3% every year when you include fees and all that.
Yeah.
Let's say you've done well for yourself, you're a millionaire. That's $30,000 a year, right? Which over a lifetime is something like $1.5 million that you'll give someone just for watching your money. That's a big job, and don't get me wrong.
Here's the thing about a fiduciary, though. The way my father-in-law has explained it, they also can make sure that certain family members don't get screwed after the event of your death. So if you're willing to give $30,000 or whatever percent every year, if you've got that kind of money, it's worth the peace of mind knowing that your son or your daughter is going to get this money instead of a cousin or a stepkid, or in the event that your will is not fully complete. Even if it's not on your will, if you have all that under a fiduciary, they can say, hey, no, this money's supposed to be left to my son, not to my current wife. Like, because there's people that aren't even blood that will take all of your money. And I've seen it happen to families before, and that's where you get the peace of mind when you pay for that. So I think it's worth the money personally.
Now, with the rate of return, just for the people that don't have a strong finance background, what is the average rate of return in stocks per year, Dustin?
So if you go from 1920, before the market depression crash, the Great Depression, up to 2020, the S&P 500 index, that's America's top 500 companies by market cap. That's the big boys. That's Google, that's Tesla, Apple's the big one. Apple's a great stock. They've been paying dividends for years. Warren Buffett, I'm sure you've heard of. His company, Berkshire Hathaway, owns half of it is in Apple, right? He's in love with that stock. So all those big boys are the S&P 500. Something like 6% per year is the average return over that entire time. But that's a misleading statistic because it doesn't mean 1 year I have $1, next year I have $1.06, next year I have $1.12. It means I'm up 50% 1 year and then I'm down 30% the next year, right? The market swings like crazy. But if you are insane enough to just hold on to a stock for 100 years, your S&P 500 index has returned about 6% annually since 1920. And what that means is about every 7 to 8 years, you can expect your money to double. So 6% isn't that exciting, but all you got to do is wait 7 years, and your $100,000 is now $200,000. So I think it was Albert Einstein who said the power of compounding returns is the most powerful force in the universe, or something along those lines. So it's pretty amazing stuff. So that's 6%, right? You pay a financial advisor 3%. Right. Now you're getting 3% a year. So now it takes 14 years to double your money.
Right. And that's kind of what I wanted to show. Like, this is something that people need to think about when they're going into this is, what the fee may not seem like a big deal, but over time, especially over decades, it's a huge deal. So just keep that in mind, depending on who and what you're investing in.
To kind of play devil's advocate, though, so I am admittedly not, the financial guru or investing is, I did my Roth IRA as soon as I became a lieutenant in the Army and had some extra change to start putting away because I knew, I think you're going to get to it, but time in investment is more important than how much necessarily later in life type of thing. So I've just done safe things because I don't know what I'm doing, right? But so, I'm probably at a point in my life now where I might need to consider paying someone to do this for me to really get aggressive here while I'm in my 30s, right? But devil's advocate, I'm an outsourcer in my civilian job, right? I outsource services and technology to companies, and my argument is this is what I do for a living. This is my only focus, is being the best at this. Your job is to build trucks, or your job is to build rockets, or whatever, right? You don't know anything about this. I know everything about this. Let me do it for you. Pay me the service fee. So in this sense, that's the devil's advocate argument is, you guys on the right of my screen here obviously know this stuff way, way, way better than me. And I've just done kind of safe investments that are kind of good to do, but I've probably not done what I should have been doing. But I don't know. I'm just kind of throwing that out there. If you're completely just lost in the sauce, like you're saying, don't just go buy a bunch of stocks or something. You don't want to just throw your money away type of thing. But
the other thing about that percentage fee that you have to understand is, like George just said, you're paying for that person's expertise and skill set. Mm-hmm. They could get very aggressive, and yes, you may be paying 3%, but they could make you an additional 5 to 10% every year, or even more. You never know, and they could be so good at what they do that you're making money hand over fist year after year because that's the right person you have. But
That
it's
doesn't
hard
exist.
to find those people. Yeah.
Yeah, because they don't exist. So that's kind of the dirty secret to financial management is nobody beats the markets. Not the pros, not the amateurs. Over the long term, nobody beats the markets. Warren Buffett has. Good on him. Warren Buffett has. Nobody else has. Hedge funds, they're all blowing up. They're losing all their money. These multi-billion-dollar, quants, right? These are the smartest guys on the planet going to Harvard and Yale for finance. They're not beating the market, right? It's a weird thing, right? Because you think, oh, plumbers are experts, rocket builders are experts, people in medicine, give it to the expert, right? It doesn't look like, and again, that's kind of a dirty secret of finance. Doesn't look like the pros, the experts in finance, actually do any better than just somebody who sticks their money in an index. So
interesting.
Feel free to prove me wrong and show me.
I've actually never heard that.
Exist, but
that's interesting to hear.
So this is a point that Morgan Housel makes in The Psychology of Money is nobody beats the market. So the S&P 500, again, your top 500 stocks, only 2 out of those 500 stocks will actually beat the average over the long term, right? So you have less than a 1% chance of your individual stock actually beating the index, right? It's weird, right? Because you think, oh, these guys are so smart, or these women, they know what they're doing. They can beat the indexes, and their fees will be more than made up for it by, the extra money they make you. And it just it doesn't work out that way. So, and again, this is the research that I've done, and according to Housel, and I'm happy to hear some disagreement on that. And I'm sure
I think we're talking different investment. Well, I think we're also talking different investments, but. Yeah. There's different types of investments. When you're going against the market, you know more about that. Obviously, I don't know jack shit about it. So yeah, that may be the case. But, there's other types that absolutely will give you a return. And if you have the right person who's smart enough to pull back when things are bad and then get aggressive when, or vice versa, depending on the market or whatever you're investing in. The right opportunity, if the right person is there to tell you, hey, this is when you want to get aggressive, and they do it properly, they can make you a lot of money. Whereas if they're like, hey, some crazy stuff's coming, just chill, and they could save you a lot of money. I'm just saying there is a reason for the fees, and in being in sales, I get it. There is value to it. But like you said, the market, so yeah, I mean, that may be the hidden trick or whatever, that they pull the wool over everyone's eyes. But at the end of the day, I mean, if you're making money, can you really complain? I mean, yeah, could you be making more? But are you going to know when to pull things out and do the right things? And maybe you would, because you know what you're doing. But Joe Schmo like me, who's a dumbass when it comes to this, I'm going to screw up every time.
And you bring up a good point. So psychology of money is essentially that when things are going really well, we think it's going to keep going well, and we want to buy, right? So most people who are managing their own money and not following a set system will buy at the top. And then when things start going down, they panic and they sell at the bottom. And then things start going back up and they feel good and they buy again. And before you know it, you're buying at the complete opposite kind of wrong time. It's natural human instinct to want to buy things when things are good, which is the worst time to buy them, right? You may have heard the term buy blood in the streets. It's very hard to do that, right? Now's a great example. Everyone's talking about recession. The market's going to go down forever. Who wants to buy stocks right now? I certainly don't. Emotionally, I don't want to.
Yeah.
Go ahead, George.
I was going to say, we were just joking about this, I think, like a week ago or something, right? I think one of us sent the picture of like how everything tanked like really hard, and we were all just like, yeah, it's all on sale now.
Right.
Time to buy.
There you go. Exactly.
I haven't actually bought any, but it is maybe time if you got some spare change to throw a few shekels out there and see what happens, So
if you've never heard the term dollar cost averaging before, that's the way to go. Whether we naturally do it if you have a 401k, which is if your job offers it, it is a tax-free, tax-deferred vehicle that allows you to buy stocks without paying taxes on the gains until you've retired, and then at that point you will. It's a deferred tax, but you'll put that in every 2 weeks or every week or whenever you get your paycheck.
Yep.
So that's called dollar cost averaging. You don't care whether the market's up or down or left or right. You put that money in and you invest it, and that tends to kind of do the best. Individual investors who tend to beat the market are people who are dead and nobody realized it. or who lost their passwords to their accounts. Those two people crush everybody else because they consistently hold their stocks, and they're able to kind of weather the storm. So in some sense, not looking at it, it really is. And again, this is what the evidence is showing. I wish that it was that it wasn't that way. It'd be more fun if the more research you put in, the more you got into it. But it does not appear that investing kind of works that way. So dollar cost averaging is your best bet. Every 2 weeks or whenever it is, put money into whatever index you think is appropriate. The classic model is 60% stocks and 40% bonds. So that's changing a little bit just because interest rates have changed quite a bit. But generally speaking, those are kind of the two big ones you want to hold. And then I'll talk a little bit about some alternative investments later, maybe like what you're looking at, Justin. If you're lucky enough to have access to private markets, those can massively outperform. So again, that's most of us are not accredited investors, meaning we are not allowed to invest in private companies. If you're lucky enough that you can, they are super high risk, but also give you a lot of potential to make a lot of money. So as long as you don't invest too much in them, they can be a good investment vehicle. But there's a good chance they go to zero. So great example would be Uber. Went public a couple years ago. The stock was like 2 pennies, when it first came out, and then it was like $30 a share, when it went public. So you made, if you put $100 in, you made like $1 million. It was insane, So the returns on private investment can be huge. And Justin, if you know somebody who has access to that kind of stuff, those guys definitely can beat the public markets. But most of us do not have access to that. The SEC is the Securities and Exchange Commission. According to them, for the protection of the general public, they do not allow people who make less than $200,000 US per year to invest in private companies. So you can go you can buy lottery tickets, you can go put it all in red, but you can't buy Uber before it goes public. I personally disagree with that. I think, if you're able to pass a test of some sort that says, I'm not an idiot, I'm not going to throw all my money away, please let me buy, one of these cool companies that's just getting started. I really believe in it. But that's not allowed. So, topic for a different podcast. So in any case, plus minus on financial advisors, I can see for a lot of people it's very valuable because you have someone watching out for your money. That being said, it's a very expensive service. You pay a premium for it, and you have to decide for yourself whether that's worth it or not. So as far as where you want your money as a dad, one of the worst things you can do is be in a position where you're forced to sell assets that are in a really bad position, right? So let's say you don't have any cash in the bank, right? You just stick everything in the stock market because you're like, man, I'm a good investor. I'm going to do this. All my money's going to go in stocks, and you have nothing liquid, meaning nothing that you could just have as cash if you needed it, right?
Like a savings account even, right?
What's that?
Like a savings account is like the most liquid, right?
Yep. Correct.
Like
yep.
Card
Or
broke,
a checking
here's the
account
money.
even, because the savings account technically takes a while to withdraw from. So the most liquid thing is a checking account.
Okay.
But yeah, right. Good example. So if you decide, you know what, I'm only getting 1% or 0% on my savings or checking account, I don't want any money in there, right? Forget that. I'm going to put all my money in stocks. Well, guess what? Now, your kids' braces need to be put on. You forgot a payment on your house. Your car breaks down. Yep. Yeah, yeah, exactly.
Dude,
and before you know it, you owe like $8,000 that you don't have, right? And you're like, well, crap. I guess I have to sell my stocks because that's what I have to do, right? So you sell them, and now the market goes up, and you've lost all that money you would have had. So the idea is keep plenty of money liquid, so that you have dry powder. If you need it, you have that cash that you can buy if you see an opportunity. And it'll keep you from going crazy as well. You'll never be in a situation, where an emergency really gets you. So personally, for whatever your total assets are worth, your house, your investments, all of that, keep 10% of it liquid, 10% in cash. Because it will keep you out of trouble. Again, we talked about, money gets you out of trouble, and it, gives you access to more time. So nothing wrong with having that money, and have some cold hard cash in the house. There are so many people who will give you a cash discount, or there are certain things that just having actual physical cash, can get you things that you can't have with a checking account.
I mean, even gas stations. There's like gas stations around my town where like if you pay cash, it's like 10 cents cheaper.
Yeah, exactly, and that's huge, right? That adds up.
Yeah.
And so there's this whole inflation is inflating all your money, all that. Absolutely, it certainly is. You know what's losing money faster than inflation, though? The stock market.
Yeah.
It's down 25%. So, ironically, if you were someone who said, I'm not going to invest, I'm just going to put it in cash, you're sitting pretty, for the past 8 months. So having some cash is a key element to keeping your sanity. And so Morgan Housel talks about a reasonable versus a rational investor. If we were a robot, and we didn't care what our wife thought or our mom thought. You're sitting at the Turkey Day dinner. Everyone's like, "Oh, how's those investments doing?" And you're like, "I don't know. I haven't looked. I don't care." Right? But you're not. You know exactly how you're doing. Your money's down, and you're. It's very hard to be a rational, robotic decision maker, right? So a reasonable person has plenty of cash, liquid, and has access to that if they need it. And you won't get quite the same returns as if you put all your money into investments, but you'll be able to sleep at night and you'll feel a lot better about it.
Chapter 10 in this book is save money. So if you're wondering where we're coming with this, chapter 10 is the chapter to read when you want to learn about saving money. And one of the quotes that I thought was so awesome that it stood out, I actually had to mark it when I was listening, was savings is a hedge against life's inevitability to surprise the hell out of you. And done right, it's meant to protect you from the unexpected.
Yep.
So yeah, savings is a huge thing, man. It's such a good hedge and a hedge of protection for your family and for yourself, like you were saying, if assets go belly up. So
there's another good line in there in your notes that says your savings is the gap between your ego and your income.
Yeah, I love that line. Yep. Yeah, exactly.
It's true.
Yeah. And that's 100% true, right? Because anything beyond your basic needs is your ego. And there's nothing wrong with having some ego.
Yeah. Oh, I want that. Or I mean, it's hard, man. Like, because there's a million things that are. Sometimes it's your kids. Oh, I want that. Daddy, can I have this? Daddy, can I have that? And it's like, oh, it's $5 here, $6 there, $7 there, $10 there, and then by the end of the day, it's $100. Like, holy crap! No. Yeah. No, you don't need any more. Stop. Like it's those little things chunk up over the course of a month. So
yeah, especially if your wife has Amazon Prime.
Yeah.
I know. Hide the credit card, gentlemen. Amazon Prime Day is coming next week.
Every wife has Amazon Prime. I think that is a woman's like best friend somehow. The Amazon Prime is just tailored to like the women. Brain.
It's their online Hobby Lobby.
It is 100%. Now I will also interject this. My wife gets me a lot of really, really good stuff that I use the hell out of off of Amazon. Yeah. So I'm really not complaining, but it is kind of funny. I'll check the checking or whatever. It's like ting 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 ting. Amazon. I'm like, all right.
Yeah, absolutely. Yep. And so we're talking about spending. Expense ratios are really key. When you look at stuff you're going to buy. So. Great example. Kathy Wood's ARKK fund is really popular. It's got a bunch of Tesla in it, kind of fancy stocks. It's got like a 1% annual expense ratio, right? So you're paying your financial advisor 3%. You're giving Kathy Wood 1%. Before you know it, you're not making any money. Whereas your Vanguard funds are like 0.01%. They're almost nothing, right? So if you shop around, different funds and stocks have different expense ratios. So go for the ones that are less expensive because you're getting the exact same thing for less money, right? So, when it comes to going to the grocery store, clipping coupons, saving 50 cents on the tomatoes, everyone likes that. Oh, no big deal. But for some reason, our brain doesn't really jump to percentages when it comes to investing and all that kind of stuff. So, over a lifetime, you can literally be talking about millions of dollars on just percentages. And you're not going to get that clipping coupons, So whenever possible, you want to really be looking at very low expense ratios, whether it's stocks, bonds, any of that kind of stuff. So we talked a little bit about percentages. 10% cash is a great place to be. Somewhere between 5 and 10% of your money can be kind of in a play fund. That's where you buy your individual stocks. I personally love Tesla. I think it's a great company. I bought some Tesla, not necessarily because I think it's going to beat the market. I do, but it might. I don't know. But I love the company. It gives me a chance to kind of follow what's going on with them, and that's a really fun thing for me. It almost is a piece of identity, right? To say, I own this stock, so that means I'm, kind of aligned in some way with somebody that I like, So that's kind of a fun way to play with stuff. I own fractional shares and some collectibles. So instead of buying an actual, say, baseball card that's valuable, a couple of new companies have come out with ways of buying a piece of a Lamborghini or a piece of the Declaration of Independence. So kind of fun. So I'll do a quick screen share here and see if I can get this going.
All right. There we go.
Yep.
It's loading.
All right. So can you guys see that okay?
It just came up. Yep, Declaration.
Okay, perfect. Yep. So there were maybe 200 of these printed back in 1776. So since it is Independence Day, I picked this one. I thought it was pretty cool. This particular company bought this at auction, and then so it's a $2.7 million market cap. Meaning, if you wanted to buy this today, it would cost you $2.7 million. However, each share of it is $34. Right, so do the math on that. They made, however many thousands of shares that you can buy pieces of, and then they created a marketplace where you can buy and sell pieces of the Declaration of Independence. I think that's pretty cool, personally.
Just quick, this isn't like an NFT. This is like the legit Declaration of Independence.
This is actually the Declaration of Independence, correct?
Wow.
Yeah. And they take really good care of it. They've got experts that are white gloving it and making sure that everything's well taken care of.
Okay,
yeah.
So it's almost, in a way, it's more of a. It's kind of like funding a historical society in a sense, a little bit.
Yeah, absolutely. And not saying it's a good or a bad investment. I have no idea. I just think it's really fun to own a piece of the Declaration of Independence. So
gotcha.
As far as my play money goes, that's kind of one of the places I went. Same concept here. This is a Honus Wagner card. You guys may have heard of it. He hated tobacco, which was kind of rare back in the 1930s or whenever he was playing. So this is an all-star player, kind of like Babe Ruth, who didn't like tobacco, and that's where the baseball cards went. So there might be 1,000 Babe Ruth cards, but there's only 10 Honus Wagners, and things that are super rare tend to be worth more money. So this is $1 million baseball card, and so it might go up or down, depending on kind of how you want to invest it. So just a couple of kind of fun. Different things to invest in. You can put cryptocurrency in this category as well. I think of it as a fun thing that I like to transact with. It's play money. I never would put 20, 30, 40% of my assets into cryptocurrency. It'll drive you insane. It's up and down too much. There are lots of people who have bought a bunch of Bitcoin, are very proud of it, and have done very well. Good for them. Does that mean that it was smart of them to put half their money into Bitcoin? Probably not.
Yeah, they just got lucky.
But if they put 2% in, then good for them, and I'm glad it worked.
You sounded a little salty there, bud.
I mean,
oh no, I'm one of those people. I put a ton of money into cryptocurrency, and it worked out really well for me. But I kept it at a small enough percentage that it was meaningful, and I made some money, and that was great. But if it did really badly, I wasn't going to starve. So it allowed me to sleep at night, because even with the small, I think I had 2% of my portfolio in it, and that was driving me insane. I was staying up till 3 a.m. every night looking at it. It was too much, so now I'm very careful with, kind of how I think about it, because it is such a powerful dopamine hit to watch your, I was buying Bitcoin around like $10,000, and then, went to like 60 or 70, and I was like freaking out. So I sold most of it, and it was really exciting, but was it good for my long-term health? Probably not. So I'll keep that in mind as a lesson. Maybe not to do that. So this is an example of a savings bond, and these are called the Series I savings bonds. Can you see that? Okay.
Yep. Yeah, that's good.
All right, perfect. So your traditional savings bond is the Series E, and all that's going to be is the base rate. Have you guys heard everyone talking about when the Fed decides it's going to raise or lower rates?
Mm-hmm. Yeah.
Does that make sense? Yeah. So that's the Fed rate, right? That's the rate that banks get. Now, you don't get that, unfortunately, right? Because the Fed rate is only, I think it's like 2% right now. But you're going to pay 3, 4, 5, 6% if you want to buy a car or a house or any of those kinds of things. We just don't get that special bank rate. So what these Series I savings bonds do is they track the CPI, which is the Consumer Price Index. And I'm sure you've heard some talk about that. It's a measure of inflation. And it's used to gauge, kind of how policy should happen, right? Because right now our inflation rate is close to 9%. That's really not a good thing. right? If you consistently have 9% inflation, it's very, very bad for the economy. Things get too expensive too quickly. People's wages don't go up, but their price of things go up. So I'm getting paid the same, but my groceries cost twice as much. I'm not happy, right? So everyone in finance's goal in the government is to get inflation down as much as possible. So these Series I savings bonds are pretty cool because they track that inflation rate. So currently, they offer a 9.6% return, meaning if I buy the maximum, which is $10,000 of these savings bonds, I would get $962 every year just for owning the bond. So that's pretty good, right? If you own all stocks, they might go up, they might go down. You don't know. You might lose money. You can't lose money with this, right? Your initial $10,000 that you put in will never be worth less than $10,000. The rate might change. If inflation drops, I might go down to 5%, and then I'm only making $500 a year on my investment, but I'm not losing money. So that's kind of the benefit of having bonds and not just stocks, is it buffers your portfolio during bad years, so you don't lose as much money.
Right.
And then you have the stocks to do well for you when things are going well. So up to $10,000 per U.S. Resident per year. I maxed this out for myself and my wife immediately. I saw that rate and said that's insane because most savings bonds, one, have risk. So I made a mistake in saying you can't lose money with a bond. You can, because if the company goes bankrupt, you do lose the savings bond, right? They don't end up paying you because they're bankrupt. They don't have to, right? If the U.S. government goes under, you're out of luck. But you have bigger problems if the U.S. government goes under.
Yeah.
So this is about as safe as it gets for investment purposes. So this is at treasurydirect.gov. If you have further questions about it, ask one of us. You can buy as little as you want, right? You can buy, it looks like $25 of this savings bond, and then you can do that thing that I talked about earlier. You can dollar cost average as much as you want. So, if you wanted to put in $25 every 2 weeks, you can do that.
This seems like a good time for there is a chapter talking about the whole time in the market thing versus, and this is something I actually kind of learned. I was fortunate enough to go to like a Dave Ramsey. Are you done sharing? Okay. Yeah. Let me close that out. When I was like at 22 or something, and he made that point home. It's like he showed a comparison of if someone just puts in $50 a month in their Roth IRA starting at like age 18 and they don't take anything out until they're like 70, they would have more money than someone who started at like, I think 45, putting in like the max every single year or some insane comparison. And I was like, whoa, like I'm 22 already. Like, so I started doing like, as much as I could, within my means type of thing. And so like, I mean, I'm hoping that that's going to work out okay for me and whatnot in the long run. But can you I know there's the chapter on that talking about that, and there's the comparison of I think like Simmons versus Buffett and all that kind of stuff. Can you kind of go into that a little bit more? Because I think it's really important for people to like see that especially if you're a younger dad, like you may not think that $50 is going to go a long way, but $50 from now until you're 65 has a lot of time to grow. And time is, like you were talking about it. There's the ups and downs of the market. Time weathers that, swing, the peaks and valleys type of thing. So.
Yeah, absolutely. So, just like I talked about housing, if you're lucky enough to be born in the United States of America, you have access to the most powerful economy in the world. Our returns have absolutely crushed the rest of the world, right? We have the Googles, we have the Amazons. There's a few companies in other countries that have done great, but it's dwarfed by the American monstrosity that is our economic juggernaut. If you were unlucky enough to be Japanese investing in the 1980s, and you put all that money in, like we talked about, your money was worth less in 2020 than it was at the peak of the market in 1980. So there's millions of Japanese people who socked away money every year, and they have less money, than they did when they started investing.
Wow.
And so there is some value to looking at investing outside the United States in case that doesn't continue to happen. But the past 100 years have just been amazing for Americans for investing. I want
to take a time out on that note, actually.
Oh, please, yeah.
Do you guys remember that article that got shared recently? I think it was in our text group, our text chain, how the East right now is trying to conglomerate some governments and create their own currency to rival the U.S. dollar and
the BRICS.
kill the U.S. dollar.
Yeah. The Brazil, Russia, India, China, and South Africa is the BRICS alliance. Yep.
Sounds like they need a little freedom.
Well, that's a different conversation.
Yeah, but I mean, to your point,
I'm just kidding.
Like that,
or am I? But anyway,
yeah, that was the kind of the point, though, is that like you don't know what's going to happen, right? And I think there was another in your notes here was like, don't make future decisions with your money based off historical events because history may rhyme, but it's never repeats, type of thing. And I mean, yeah, this is a perfect example, Justin. I mean, yeah, that we don't know if that may have huge impacts on us, maybe in a bad way, but you don't know. So like, I think what you were kind of saying, Dustin, was, don't put all your eggs in that basket. Look at stocks, bonds, all these different things. But
yeah, and that's exactly, I'm a very patriotic person, and I invest in American companies because I think they're the best, and I think they'll continue to outperform. That being said, it is definitely prudent to have some investments that are outside of expecting U.S. companies to continue to do well. You never know, right? I mean, crazier things have happened, it makes sense. You don't want to be broke if Apple suddenly decides, they're not going to be a good company anymore, and they just go downhill. And then, I don't think it's going to happen, but it certainly could. Yeah. So don't put yourself in a situation where you are reliant on other people, for your money to do well for you is key there.
Yeah.
Let's see. So, there you go. That be a paranoid optimist. Right, that's the expression that he used. So optimism is key, right? If you genuinely believe the world is going to be worse in 50 years for your children, don't invest. Why would you, right? If the world is going to be terrible and nobody's going to make any money, buy gold, buy assets, buy palladium, that kind of stuff.
Buy bullets.
But if you genuinely believe, exactly, that the world is going to be a better place in 50 years, that people are going to have more money, and that companies are going to be doing cool new things, keep investing, right? That's what optimism is. Being a pessimist is kind of sad and lame. It sounds cool. It's very tempting, right? Because pessimists sound smart. They say, the America's weak now, it's not doing well, they're going to get crushed by everybody, so don't invest in America, right? They sound smart and clever, but they've been wrong, for hundreds of years. And, I think we can, as optimists, hope that things will continue to go well. But it's also important to be paranoid, right?
Yeah. Well, like how many people have come out over the years being like, the end of the world is going to be on this day at this time. And it's like, yeah, okay, buddy. If it is, and if it is, it's like, okay, well then, I mean, I guess time to go. It's like, what are we going to do? Stop living till then? Or something? I don't know.
Well, in my opinion, pessimism is more persuasive than optimism. And he says that in the book in a lot of key points. And like one of the things he goes over in the book is how, if you look at the last 100 years, we've had like 10 something recessions, 2 world wars. We had a Great Depression. We've had all these things. And you would think just looking at that history track that we'd all be broke and just completely dumb poor. But, we're still like 8,000 times wealthier and easier living than we did when all this stuff started, when the stock markets originally opened. So, the pessimism was all throughout, just, woven in that history. But, when you look at it from a bird's eye view, hindsight, it's something that can make you optimistic. And, in my opinion, optimism always leads to ingenuity. A great example of that is Elon Musk. The man is extremely optimistic. And he looks at things where most people are pessimistic, like this is impossible. He says, okay, well, it's got this amount of problems. Let's handle the first one, and then the next one, and the next. And before you know it, you got SpaceX, or you've got something like that, So I think the optimists will always come out ahead because they believe in change and solutions. Whereas
America has a culture that celebrates that, right? I mean, we talk about our innovators as heroes. You talk to people in Ireland, China, Africa, a lot of other places. They don't look them that way. They say, oh, these guys are, just rich jerks, right? And there's Americans that think that way too. But generally speaking, if you want people who really celebrate entrepreneurs and scientists and inventors, it's Americans. It's built into our culture and our DNA, and there's a reason that we continue to kick butt. That being said, a lot of these people coming in are immigrants, right? Elon Musk, great example. He's not American; he's South African. If you look at the top CEOs of like the top 20 companies in America, like 19 of them are like Asian or like of some are not born in America. So a lot of our strength comes from diversity and people coming in and taking advantage of that culture. So what is the joke? What can Brown do for you was I think it was UPS that used to have that, and now like 15 of the top 20 companies are run by Indian dudes. So their joke is, "What can Brown do for you?"
Yeah.
As a CEO. So
I mean, I work for an Indian company. I mean,
it's what I'm sorry.
I work for an Indian company, and we have a U.S. subsidiary. But I mean, and we've grown. I joined the company 3.5 years ago, and our revenue by per year has grown like 4 billion since then. So I mean, it's just growing insane. So like, I mean, I'm kicking myself for not buying some of the stock back when I joined the company. They're like, God, no.
Yeah, Tesla. So just to kind of touch on what Dustin was saying, Tesla is really a great place to invest if you've already invested in it, because they got a truck that's coming out that gets over 775 miles on its current batteries, and they're saying that they're going to double, if not triple that in the next 3 to 5 years. And here's the crazy thing. They said you will literally never change the brakes, ever, because the electric motors that run off the regeneration brake system literally stop the vehicle for them. And it can tow on just 2 of its motors more than any turbo diesel can out there. So, and they put a 1,000,000-mile warranty on the actual truck itself and anything that breaks on it. It has 4 motors, so it's got enough power that it literally can quadruple any truck's load currently. And even on half of its capacity can still outperform any truck there is. So it's pretty funny. Like Tesla's in, ingenuity. You guys were talking about, immigrants that come to this country illegally. When they do the right things, they're getting rewarded for it, because this is a capitalist economy, and it's I guess a capitalist country where you can really take advantage of some things. And someone like Elon, let's just be real, the man's a genius. He's our current day, real life Tony Stark. The guy's doing things that you just wouldn't imagine is possible, and he's bringing us so far into the future, and he's giving us warnings on a lot of different things as well, and that's another podcast. But
I like a lot of.
I think Tesla's a smart move for.
I don't want to be the fly in the ointment. I like a lot of what Elon's doing. I especially when it comes to like free speech and some of his political stances of like, well, the law is this, so that's what we should do, and especially when it comes to technology, the law always lags behind technology. Unfortunately, it's just we have an intentionally slow moving government. So when it comes to governing that, so I think he's kind of a visionary in that sense. But there's some things. He's a transhumanist, man. If you don't know what that is, look into that. That is some scary stuff. I think because you're kind of getting into that realm of like playing God and things like that, and that's also where some of those things, like you'll own nothing and be happy about it. That's kind of like what a lot of those people believe, and I mean that's terrifying. So I don't know if he's like really that far that way, but I'm just saying, like, don't idolize any one person that much, right? Because people are flawed, people can be corrupted, people have ulterior motives. But yeah, I think in terms of the rich and powerful people, Elon's probably the most like even keeled, but also he's trying to do a lot of good things for humanity. I would say most people are not doing that, but anyway, we're getting way off on a tangent here, but
yeah, agreed. So Tesla's a great example of that. The average American worker is 17 times more productive than they were in 1950. So for every dollar that you and I could make in 1950, we can now make 17. That's insane, right? So we needed 17 people to build, whatever in the 1950s. We now need 1.
Right.
Right. And so that's, our stock market reflects that. We're generating so much value and creating so many amazing things, and we'll continue to, I believe. And so it makes sense to invest as an optimist. But be paranoid. Expect a huge drop. We don't know. I mean, if this war in Ukraine drags on, if China attacks, they want some chips and they go to Taiwan. Yeah, exactly. I mean, if all that happens and Biden gets reelected, whatever. I mean, who knows? The economy could go to hell. So,
Wait, it's hitting already?
I'm gonna need to trade in the water for the whiskey now.
Yeah. So it's good to be paranoid and say, listen, in 10 years, I think the stock market will probably be doing a lot better than it is today. In 2 years, it might not be. I have no idea. Yeah, you can't predict short-term stuff. Nobody can. Let your money sit, do its thing, and trust the system and allow that money to go up.
Yeah.
So specifically about Morgan Housel's book, The Psychology of Money. Number one things you talk about, again, like we talked about before, money does not buy happiness. Having things doesn't make you happier. Having control over your time does. The number one thing that'll make you miserable as a dad, and one of the hardest things about it, is you don't have control over your time. You know, you got a podcast you really want to do with your buds. You're super excited. Oh, we're going to do this podcast. And your kid is sick and your wife, you know, is unable to help, you know, for whatever reason, you have to cancel on your best friends. Feel terrible about it, right? You can't control your time. That never would have happened before you were a father. And now, out of nowhere, you know, these things happen. That's a bad feeling. So, you know, one way we can have control over that is to make sure that it's not a financial burden that's causing it. You know, we have to say, look, I literally can't afford to pay rent this month. I got to take another shift at McDonald's. I can't do the podcast. You know, sorry guys.
Yeah.
That's a crappy position to be in. That's a position a lot of dads are in this country, and I feel for them. It's hard, you know. Having to go work, you know, a job you don't love, and be away from your kids is a really tough decision to make.
Yep.
Yeah,
I was doing that. Yeah, for the last 6 months, I was in the car industry working 12 hours a day and weekends, which I'm not used to because when I was in medical sales before, with my nephew,
yeah,
I had all holidays off. I mean, there were weeks, literally weeks, where surgeons just didn't plan schedules or scheduled any operations and their surgeries, and I just would go out and try to get new business, and that's it. Like I didn't have any cases, no nothing. So it was always interesting to see how, you know, things changed for me. But yeah, when I was in the car industry recently and we had our newborn, things just shifted and we moved into a new home. There's a lot, man. I wasn't home to do anything, and my wife, she felt the burden, man. And you know, I'm the husband that likes to do the laundry that most of the other. I'm sorry if you can hear the kid in the background. That's my niece. She's losing her house shit right now. It happens, but I just, you know, it put a toll on our marriage for a little bit, like not in a bad way, but you know, there was agitation. You know, I'd get home and my wife didn't have 10 minutes to herself all day because, you know, she's dealing with kids as a dentist, and then she comes home and she's dealing with our son. And I would just try to tag her out, say, hey, take 20, you know, because you could see the frustration on her face, and that's so hard. And I did that, had a financial need, and it sucked because had it not been for that, I would not have ever worked that job. I was freaking miserable. They had a lot of empty promises. I won't go into, you know, what all, but yeah, just wasn't a good situation, man. So I feel for any father out there that is in a position, and just know that, like, if you take one bit of advice from me, know that you're never stuck. There's always opportunity. There's always ways to get out. And, you know, with listening to Dustin's financial advice and other people, you know, it's not just that. It's, you know, you can do things to change your career. You can go after things. Like I quit my job one time, cold turkey, went to Florida, lived there for 8 months, went to medical sales college, put myself through school again, paid damn near $25,000 to live down there and to go to school, and, you know, created an opportunity. And I know that's not something that everyone has the opportunity to do, but there are ways to do it. That's my point. You can learn things and create opportunities, and just never limit yourself. That's my point.
Yeah, well, you got to kind of you have to view it as an investment in yourself too, right? And I'm not a huge Dave Ramsey fan, but like one thing I really took away from him was you have to live like no one else, so you can live like no one else, right? And you know, that it's easy to say, you know, right? In my position, I've been very fortunate in my career and whatnot, but you know, like I worked really hard, and you know, when I left the military, that was really scary, right? It is. I had no corporate experience on paper. I don't really have any, like, you know, well, why are you going to be good at sales with technology? Well, I don't know. I blew shit up in the Army, you know, like it doesn't on paper doesn't sound like it would translate very well, right? But you know, like that's kind of I took that bet on myself, right? I believed in myself, and, you know, worked hard, and yeah, I mean, the first job I landed was horrendous, and I was there for 3 years, and I was miserable. But I just knew that it was worth it because I was in a good industry, and if I just kept grinding and kept working hard and keep looking for new opportunities, one would come along. And so, you know, similarly, you were saying, Justin, got out of that job in the new company where I work now, and it's been really good. But you know, you got to kind of take that bet on yourself too. So if you're at a dead end job, I mean, right now employers are begging for work; they're begging for employees. So I mean, now is probably a better time than any to take that bet on yourself. And I mean, I've had people reach out to me. I volunteer my time to like mentor people getting out of the military, to like talk to them about what their thought process is, what they want to do, and just give just cold hard advice based off my experience. Not that I'm like an expert, but I tell them a lot of times like, what's the worst case that happens, man? You take the job and you leave in a year. Who cares? I mean, like you're gonna learn something. I mean, just go find an adjacent job that makes this about the same amount of money, if that's your concern. Like unless you're starting up a business from scratch where you own all the risk. If it's just a paycheck, take the gamble. You may be the best in the company at it, right? You don't know because you've never done it. You've just been in the military before, so take that bet on yourself. But that's from my lens, from my view of how I got to where I'm at. But I think
That's another thing. If you're down on your luck right now, you're in a position that you are not in a good job. You are in excuse my language, but a shit career, and you're not feeling good about where you're at. Trade skills is another thing, man. George is absolutely right on the fact that people are looking for anybody who's willing to work right now.
Well,
I can't tell you how lazy people are these days that I used to work with. Like in the car industry, we couldn't find mechanics because they go, and here in Louisiana, they go straight to the oil field. And they know they can make six figures sitting on their ass doing absolutely nothing. Whereas, you're going to work your butt off as a mechanic. So I think if you can get a trade skill set, sky's the limit, man, because people are needed right now for that. So
I
definitely
think,
just my little tidbit.
I don't have the numbers off the top of my head, but I know that there is a huge gap that's like forecasted for like plumbers, electricians, all that kind of stuff. Like the generation that typically did that. Like, our generation was you got to go to college. You got to go to college. That's the only thing that matters is going to college. It's like, really? Is it really? Because now, like, if you look at it, I mean, there's kids with
Gary V, that question.
crippling college debt,
college
debt with like an art degree. But if you went to like a trade school, which you can probably knock out in a year or two, like I don't know how long there. Some of them are pretty quick. You can come out making like 80 grand a year, depending on where you live, as like an apprentice. And that's the bottom you're gonna make. Like my guys I work with. In the National Guard, like they run their own electrician business or plumbing business, and I think they make more money than me, and like they're my subordinate in the military. You know what I mean? So like they're doing really well for themselves. They have to work hard for it, but that's an option for a lot of people. Like school is not the only way. Like that is probably the worst lie that's been fed to our generation.
No kidding. I think your average college grad makes like $40,000-$50,000 a year. You can make 5 times that, in a 10-week trade course, in any number of different fields. I have a college degree. I'm glad I have it. It worked great for me. But if my son says, Dad, I don't like school that much, I don't want to go to college, I'll be thrilled. I'll be like, don't waste your money. That's perfect.
Don't waste my money.
If he wants to go to college, I'll be just as happy.
Save Daddy some money.
That's right. Yeah, yeah, for sure.
No, but here's another thing. Like, just for an example, I have a friend from Mississippi Gulf Coast, and he was absolutely miserable doing what he was doing. He was working for some oil company as like a lower tier person. Long story short, he's like, you know what? Screw this. He's got a kid on the way. He's like, I'm going to go get some training, and he went and got not just welding certified, but he got underwater welding, which is very dangerous.
Those guys make bank, though.
He is an underwater welder, and he went from like living in a trailer park to owning like a $3 million home. The dude makes almost probably $500,000. It's the most ridiculous thing I've ever. And now he has an extremely, extremely dangerous job. I mean, you have to know what you're doing, but he was extremely good at it, and now he's crushing it. He's got 3 or 4 other guys that work with him, and they're doing it. And I'm telling you, trade skills, man.
Yeah, I guess
that's the hidden golden gem right there. That if people just would grab that, they could easily.
The parallel I was trying to draw to from this is like, obviously, if you make minimum wage or something like that, you can't really invest a whole lot, right? And so, just the cold hard facts of it, compound interest, the more money you have, the more money it makes you, and that's just how it works. And it's not fair, right? The world is not fair. And do I wish I made more money? Of course. I mean, I think we all do, right? It makes a lot of things easier if you have a lot more in the bank, type of thing. But like if you feel like you're at at the bottom and you're stuck or something like that, like you should be. Advice I've got from numerous people over my career, whether it was in the military or in the corporate world, was, in reality, you should be evaluating things every 6 months, man. And if it's not working for you and your family, you need to make a change, and that's your responsibility. And Yeah, I mean, I've done that, right? Like I've kept looking for new opportunities, and you can always say no, right? You can interview, and if you change your mind at the last minute, you can always say no. There's nothing they can do to you. But if you don't take that interview or you don't try, then you're going to stay exactly where you're at. Nothing will change. And when it comes to investing, if you're not making enough where you have a surplus to put some away for the future, then you can't invest. So, I mean, maybe I'm oversimplifying this argument here, but you gotta make that change so you have a little bit more to even start putting away for the future. And if you're watching this and like maybe you're young, you're like 18 or 19, good on you, because that is like the best time to figure this out before you go and blow a bunch of money on stupid stuff.
Yeah.
Because like we said, little bits now works out better in the end. But
I think that's an excellent point, though, man.
Yeah.
I kind of have my own motto that I created is invest in yourself before you're ready to invest in wealth. So, you have like if you're at the lowest low and you've settled for mediocrity, or maybe you're stuck because you have this fear, this anxiety that you have kids to take care of and a wife and a mortgage and all this stuff, and if you change jobs, this unknown can take you out or take your family out. You really just need to start grinding for yourself and for your family on the weekends or any free time that you have to get to the place where you can step out on whatever opportunities out there. And look, we live in an age now digitally where you can learn anything through YouTube, literally anything. So, I would always encourage anybody, go on the internet, utilize people, start networking through social media to people that are experts in those fields and say, hey, look, if you got a few minutes of your time, I'd love to ask you a few questions, and just start investing in yourself. Like, have self-worth. If you don't have it, make it. And, just start keeping promises to yourself and keep investing in yourself. And before you know it, you will have a return on that to where you can actually start investing in wealth and other things, and I think that, yeah. So
and learn to fail, because you're not going to succeed the first time. You're not going to succeed the second time. One of the best experiences I hated at the time, I sold books door to door my sophomore year of college.
Rough.
It was a horrific, terrible experience. I cried multiple times. It was really, really hard. It was probably the first time in my life that I experienced true hardship. I knocked on people's doors and I was like, hey, do you want to buy this crappy book? And they were like, no, that's terrible. And they'd slam the door in my face. And I was a sensitive little millennial. And I was like, why don't you love me?
Yeah, man.
I dealt with that for 3 months of my life. I fought through it. I think I ended up losing money on it, right? With all the travel expenses put in.
Yeah.
But you learned so bad.
But you learned some really valuable, tough lessons, right? And I'm wearing a shirt
absolutely.
right now here from Mighty Oaks. Shameless plug for that organization. Look them up. They do amazing things. But the motto that they say a lot in their program is failure isn't fatal, right? And we are inherently designed as people to not. Well, okay, we're not talking like combat scenarios here. We're talking, in your daily life,
Just trying to lighten up the middle, though.
But it's really not, right? Like, like I said, if you take that job and it ends up not working out, the world is going to continue on. You can find another job, like your life will continue. But like to your example, you learn something through the experience. And that's going to better you for the future, right? That's the investing in yourself type of thing, taking a chance on yourself. But, yeah, man, failure isn't fatal. We're naturally inclined to not want to fail. We don't want to be rejected. We're human beings. We are created to want to be loved, to feel accepted, to feel, all these emotions that are positive. So taking the risk to fail is not natural. It is a forced thing that you have. And, I'm working on this with my daughter now because she's smart. She's like old enough now to start seeing, and she's really hard on herself when she fails, type of thing. And I'm really trying to like talk her through that. Like, look, the most powerful people on the planet, the best athletes on the planet, the best musicians on the planet, whatever field they're in, they got to where they are not because they were like naturally the best. There's tons of people with immense amounts of talent and gifting that don't ever really go very far. Because their work ethic sucked. And like Michael Jordan and all these crazy people who've done like insane things,
Bryant.
they failed a lot, but they never gave up. And I'm not saying that like they're like perfect people and everything about them is what you should emulate trying to be, but the fail before you succeed, that's life. I mean, it could be the dumbest thing. Like it could be a video game. You're gonna fail. You're gonna lose to the boss a lot before you finally beat it. Especially like difficult games like Dark Souls, where the game is designed to beat you. You know, I mean, like
I hate that game.
Right? Yeah, I don't play it because like I've got enough frustration in the real world. I don't need to, in my free time, make myself get more frustrated. But anyway, like, I'm just trying to draw the correlation here that like everything in life, you're going to fail at least once. Like no one walks this earth without ever messing up at least one time. And at least probably a million times, if we're honest, right? Like,
but there were millions of swimmers trying to make it to that egg, and you were the one that made it. So you are a winner.
You're already a winner from the get-go. That's right. Yeah.
Gary Vee said it: 4 billion to 1. That's your odds of becoming a human. And you won that lottery.
That's funny.
Yep, exactly.
As far as fail is concerned, what I tell my son, I use it as an acronym. And failed for me is first attempt in learning. Mm-hmm. And so I always tell my son that you will not learn anything. You will always be a novice or somebody that has never explored something unless you're failing. And if you're out of your comfort zone, you're failing. You're learning, and you're going to succeed eventually. Yeah. Especially if you're talented or naturally gifted towards it. So first attempt in learning that's the way you have to look at it, and you can't look at it any other way.
So as it comes to investing, right? This start small, right? And try a couple things with like, treat it like you were saying, Dustin, where it's, kind of the gambling analogy there, where it's like, okay, I'm willing to lose this amount of money, and if I lose it, I'm going to be okay. I'm not dipping into like feeding my family type of thing. Try a couple things, see how they go, see what you're comfortable with. Maybe, I need to do it. I need to step out a little bit more and put my money in a couple different places too. So I'll eat my own advice here. But I'm going to do it with in a smaller amount to ensure that I'm not like, putting my family at risk type of thing. But, so I just want to take a quick check here. We're at about an hour and a half. Dustin, did you want to like close with some final thoughts on the book and investing and, final words of wisdom for us, as you are the guru for this episode?
Sure. Yeah, there's a couple key ones. Number one is the pain of loss is 10 times as bad as the joy of gain. So, keep that in mind. If you're looking at your portfolio every day, you might be up over the year, right? You might be up 2%, but you looked at your portfolio every day, and all that pain of seeing the red and seeing losing money will drive you insane and make you hate it and make you potentially sell, at a bad time. So one of the best things you can do is set it and forget it. Choose an investing strategy that you're comfortable with, that you understand is a good decision, and let it ride. Don't look at it. There's other more interesting things to look at. As far as your portfolio, your real money, stick that in the corner. And if you love finance and you just really want to look at stocks, look at your play money. Pretend your big 95% portfolio doesn't exist, and look at your 5% every day. And as that goes up and down, whatever, it's not that much money, so it's not the end of the world. And even that might drive you crazy, to where you're like, oh my God, my, little bit of money here is up and down, whatever. But, don't look at your whole nest egg every day, because it'll really, it's just basic psychology. The pain of loss is always much, much worse than the joy of gain. So don't do it. And a few key decisions make the difference. So an investing genius is someone who does the average thing when everyone else is going crazy, right? So if you're able to stick to your plan, you will do absolutely fantastic. Most of us aren't able to, most of us are not long-term thinkers. What is it? 70% of Americans are overweight, right? So they're, not sticking to their diet, clearly, right? And
is that really the stat? Is it really 70%?
It's 60 or 70. Yeah, obese is like 30 or 40%, and then actually overweight. Colorado was the last state in the country about 10 years ago for the majority of Americans not to be overweight. And now BMI is a little unfair, right? I think Justin and I and Brandon are all like, our BMIs are probably slightly elevated compared to where they should be because we're so muscular. We have so much muscle that it screws up, So there's a few examples of that but most of it is real, and most of the time BMI is pretty accurate. And
sorry, I was like, geez, that's a really high percentage.
It's wild, and it's the same thing. It's long-term thinking, right? Your health is just another form of wealth.
Well, it's
right? And
discipline
so
too, right?
there's financial wealth. There's all kinds of different wealth. But your health is an investment just like anything else. And most of us don't invest long term in our health, and most of us don't invest long term in our finances. It's not as much fun, right? Why would you sit on money that you could buy a Lamborghini with now? And stick it in the stock market and hope it does better later.
Yeah.
Most of us don't think that way. We go, you know what? I'd rather have the Lambo now. And honestly, Lamborghinis have been really good investments the past 20 years, so that's kind of a bad example. You actually might have been better off buying a Lambo and then selling it later. But just being silly. But
that's funny.
So that's a real key there is stick to your plan, right? And be a long-term thinker, because most people are not. You have to be a little bit of a weirdo in this society to succeed on the level that you want to, right? If you want to be healthy, if you want to be wealthy, you cannot follow the average. So
I guess kiddo's calling. I gotta go.
All right, man. Hey, Justin, appreciate it, man.
Thanks, man.
Take care.
Hey, guys.
All right, love you, bro.
That what you just said right there, kind of doing the uncommon thing or the hard thing. That's something I learned too. Is like personal denying yourself gratification is discipline, and that's what makes people successful. Is because that's what a man does. Like a child gets everything they want whenever they want it without thinking about the consequences. An adult, a man, thinks through, okay, I'm going to deny personal gratification on this thing today because 5 years from now it's going to matter. And like like you were saying, investing, it's not sexy, it's not exciting. That is like the ultimate example of that mentality. Because I mean, if you've got $1,000 just sitting right here and you're like, oh man, I can get that, whatever I wanted for so long, or I could put that in, my retirement fund or my kid's college fund.
Wah wah.
It's like, I was like, like in that moment, it's like, crap, but that's discipline.
I honestly think that's what Housel's conviction is that behavior trumps other considerations. In the pursuit of building wealth and financial success. I mean, in the book, there's a couple examples of some guys that were kind of polarized. Like one of them was Ronald Reed, and the other one was Richard Fuscone, I think. But Ronald Reed was just a janitor and a gas station attendant. But by the time he died, he had $8 million in net worth, and he donated a majority of his fortune to a local hospital and a library. He was a philanthropist at that point. And then, Richard was a Harvard-educated, like big-time Merrill Lynch executive. He borrowed heavily and spent impulsively and lavishly, like you were saying. And, the 2008 bubble hit, that crisis hit, and he had to declare bankruptcy. So, Ronald was patient and Richard was greedy. And I think that's what Housel is so perfectly connecting the dots to, is that, it's all about your behavior, and your behavior and your education towards that behavior can eclipse the massive education experience gap that was between those two guys.
That's good.
So I feel like, for me personally, it's patience, discipline, persistence, optimism carried with the idea of being careful, of adapting and making sure that if changes are occurring to the market, which they always will, especially over decades of time, that you adapt to them, and that you try to stay ahead of that curve. But that behavior is one of the most important things in the books that he talks that really pushes. It's better than any analytical tool you can have. Is having that emotional regulation when stuff starts tanking, to say, okay, I'm going to diamond fist it and hold it out, and I think that's what I got from the book, was that doing well with money has little to do with how smart you are, and a lot to do with how you behave.
That's good.
Yeah, exactly. And make sure that it's enough. That was another big one, is some people, if they have $1 million, they want $2 million. And then other people, it really is enough. If they have $100,000 a year, that's all they need. They're very happy. So make sure that what you have is enough for you. Find contentment and happiness with the amount of money you have, and don't don't chase money that you don't need with money that you do need. Right. So find a way to be happy with what you have. That's a real key difference.
Yeah.
That you see between people who are happy with their money and people who aren't.
Right. That's good.
Absolutely.
Alrighty. Any last thoughts on the investment from you, Dustin? Or was that kind of is that your closing?
No, I don't think so.
Okay.
I've got a Twitter account I can shill. I guess if anyone has questions, you're welcome to DM me. I'm happy to help out. If you just look me up, it's studmuffin.eth because I'm a big crypto nerd. Feel free to at me, DM me, whatever you want to do. If you had anything you found interesting, you're a financial advisor, you want to fight me, bring it.
So I'll be sure to put.
I've got family that's in financial advising. I have nothing against it. Yeah. I just personally not my thing, but it's a heated topic for sure. I'm glad we were able to have that conversation and had some disagreements there because that's an interesting one.
Yeah.
Feel free to look me up and talk to me, and I'm happy to talk it out.
I'll be sure to put your Twitter handle in the description of this video.
Perfect. Yeah. Thank you. Okay.
My exiting thoughts too. Don't just read his book. There's other books that can really help you in your financial journey because just like anything else, you need a good balance. So a great example for me when I was learning about becoming debt free with the Dave Ramsey program was that I learned that there's pretty much two primary types of people. Somebody who leverages debt to create wealth. Your entrepreneurs, your people that are buying homes like Airbnbs, rental properties that cash flow things, but they're continuously cash flowing into more debt until they decide to either sell or they just have enough cash flow where they're actually making considerable profit and they can live off of that cash flow. Like you were saying, but the other person will be the person that eliminates debt. They're completely debt free, and then that frees up the burden and the pressure on them to go out and to invest heavily for long term, big picture processes like your generational wealth that you create over 30, 40 decades, 30, 40 years or decades of time. So I think there's kind of two sides, but there's risk on either one. It's just how much risk are you willing to take? Because when you're leveraging debt, there's a lot more risk. Yep. Whereas if you're debt free and you're playing the slow game like the turtle on the hare race, you're looking at the big long time picture, and there's a lot less risk, and it's a more conservative approach. So try to figure out where you're at with those and balance yourself in them, and just like any other thing that you're trying to improve yourself on, really just tap into the knowledge of other people that have wrote books and that are the best at that field. I can't stress that enough because that's where people really learn and grow and can actually apply things to benefit their life.
That's good. I like it. All right. Well, with that, let's talk about next episode and what the homework will be. And then I think we can close with our highs and lows of the last 2 weeks. We'll start with the lows and then finish on the highs. We'll finish with positive notes. So the next episode, we will be talking about the book called Tender Warrior. And that's probably backwards for my camera, I guess. But that's what the cover looks like. You can find it on Amazon. I don't know why it's mirrored somehow, but it is. It's written by Stu Weber. I will put a link to it in the description. And specifically, we want to hone in on the chapter. I believe it's chapter 3. If you bear with me for a minute here. Yes, chapter 3, and it's called The 4 Pillars of Manhood. I kind of referenced this in our opening episode, but that chapter really defines, what is a man, and those pillars are what, if you look at it from that context, being that type of man that has all of those in your life and puts conscious effort into each of them, generally will make you a well-rounded father, husband. If you're single, same thing. It doesn't matter. This is what men are. And so I think that would be a huge, valuable chapter for us to hone in on. The rest of the book is amazing too, so I'll kind of prepare some thoughts on, other talking points from the book. But that's the chapter I really wanted to hone in on. I think it would be a great early episode for this podcast, talking about fatherhood, and and for many men nowadays, right? That question of what is a man doesn't have a definitive answer like it used to. And so hopefully we can provide a little bit of that context, because another principle that I kind of buy into is that only men can draw out a man from a boy. And that's not a knock on women. It's just how we are wired, right? Only other men know your heart the way that you do. And just like, we always say that women are mysteries. It's the same thing. Like, we'll never really understand them. We could try. Don't waste your time, basically. But anyway, so there's a lot of topics there that I really want to get into. I think it's going to be super good discussion. And if you read nothing else from that book, that will be super valuable for you, that singular chapter. Especially if you're someone who maybe struggled or you didn't have a dad in the picture growing up, things like that. It'll help maybe solidify some of those things that you were never taught or maybe not taught very well. So, yeah, that'll be the homework. So just to recap, it is Tender Warrior by Stu Weber, Chapter 3, The 4 Pillars of Manhood. So I'll put that in the description. And with that, Brandon, would you like to start us off with, frustrating thing from the last couple weeks and then a positive thing?
Let's see. Frustrating thing. Pretty much just two things. Just the heat down here in the Southeast. It's like walking into a sauna. You just soaked after 5 minutes of being in it. So having to work outside, keeping, the landscaping and the upkeep of my house outdoors is miserable. The high would be starting my new job as a research analyst for a financial firm, fiduciary firm, next week. I'm super excited about it, and I just feel like it's something that God just placed in my path, and I feel like it's His will, and so I'm very excited about it, and I feel like my life is just really kind of career-wise is kind of skyrocketing at this point. So
congrats, man! That's exciting.
Thanks. Yeah.
And you're completely changing careers, right? This is whole new.
It's a different field for sure, but I feel like a lot of the logic-driven, like the information system stuff, the auditing, and the my always knack of ever-ending wanting to research and learn and master things will just tie into it perfectly. And I think awesome. God knew exactly what He was doing. So
yeah, I just wanted to. You did what we talked about of taking the bet on yourself and making that jump. So. Congrats, man. I'm glad that's exciting.
Awesome. Thanks, man.
Dustin, you want to go next?
Sure. Yeah. Frustrations are probably more personal. I've been a little disappointed in my attitude this past couple weeks. Nothing really bad has happened, but I don't think I've appreciated a lot of good things in my life the past couple weeks, and I've kind of allowed little stuff to get me down. And I know I'm better than that. And the only person that hurts is yourself. If you're cranky or you're entitled, or you say, I got stuck at work an hour late. The world is so unfair. That's really not a good way to go through life. And it's very seductive to say, oh, I deserve better and the world hasn't been fair to me. So, this is crap. And that's not how I want to live my life. That's not how I typically do. And I'm confident I can do better in the future. The high for this week, I got to see a SpaceX rocket launch from 3 miles away. I could feel the heat. I was shaking from the rumble of it. I mean, it was insane. It was just really cool. I kept going through military checkpoint after military checkpoint and being like, where am I going? And then all of a sudden, I mean, just like this just insane rocket shoots 60, Starlink satellites into orbit within, I think, 5 minutes. And then it lands, and an autonomous aquatic drone knows exactly where it's going to land, and you can watch on video as the rocket then lands on the submersible device, and then they reuse the rocket. I think that was its 15th launch.
Jeez.
Everyone said that reusable rocketry was impossible, and they were wrong. They're doing it, so it's pretty exciting stuff. So I get to see that, right? That's literally a miracle.
Yeah, that's a bucket list thing right there, man.
I mean, it's like,
especially for somebody like me that drinks out of like space mugs and stuff.
Right. Yeah,
that's really cool.
It's super exciting. But I got stuck work an hour late that day, and I almost missed it, and I was furious. I was like, my life's stressful. It's so unfair. And I thought about it later, and I was like, man, I'm letting little stuff get me down. I'm better than that. I'm gonna I got to shape up. I got to get my attitude right. So that's my goal for the next couple of weeks is bounce with it.
Well, good on you, brother.
Good deal.
Yeah.
Good deal. Appreciate the honesty too.
Yeah.
And I'm jealous that you got to see the rocket. That would
You should be. It was amazing.
Yeah, so I mean that's basically the only like type of, you know, explosive I haven't really been like in close proximity to is a rocket launch. So that's probably the last thing I need to check off on the pyromania list of things. But
Come on down. Yep.
yeah, we'll have to make that happen. Let's
Yeah.
see. Frustrating thing for me. So I have to preface it. For me, it's work related. Like work is going really, really good. I've kind of transitioned. Just things are really, really taking off in all the right ways for me. But some of the people I work with, it's like never enough for them, right? I'm in sales, and it's just like the classic, you know, sales manager type, you know, meme. I don't know if you ever seen them before. It's like, yeah, but you'll sell a deal or whatever. It's a really good deal, and they're like, yeah, but why wasn't it more? And it's like, okay, well then you go do it, man. You know, but like, so I've been kind of like getting that from some people, you know, that kind of like mentality, and I'm just like, man, I'm trying not to let it get me down, but like, I am at a point now where I feel like I'm doing it right. Like I'm not relying on other people to get to like accomplish these things I'm having, and so it's kind of just like the whole fly the ointment thing, and I'm like trying not, like you were saying, trying not to let it frustrate me. But like I had to vent with my wife in the car the other day, and I was just like, "This is just going on and on and on." She was just like, I'm sorry, honey," you know. But I got it out of my system. But that was pretty frustrating because it's just like, you know, I guess maybe I was just raised differently, and especially like as, you know, a commander in the National Guard and things, you know, like when people do good things, I try to not be like, yeah, but, you know, I wanna affirm the good that they've done. And so for me, like that's kind of like how I was brought up, to have that like kind of kicked in a little bit. Is like, just give me my 5 seconds, you know, like we can talk about what we can improve, you know, like maybe a little bit later, not at anyway. So that was the frustration. The positives, you know, work going really good, but family time. We had a trip. We went and saw friends for the 4th of July weekend. It was super good. It was actually the first time we've been able to get our families together, because we were like gonna do it in 2020, and then COVID literally like kicked off. Like we were gonna go to this thing in April, I think, or end of March, and like everything shut down like 2 weeks prior. And so we've just, due to life, have been unable to kind of get the families together. So finally we did, and that was awesome. And then on an impromptu on our way back, we stopped in Chattanooga, and we were gonna just eat and then drive home. And decided to just stay. And I used some hotel points, stayed at the hotel, and we took Raylan to the Chattanooga Aquarium, which is super awesome. So it just ended up being like a really, really good family weekend. And I'm about to take off for training, so I'm, you know, just really thankful that, you know, one, we had the time, but two, that I had the means to kind of make that possible. And you know, that those are, we made some memories this weekend that, you know, I'll probably remember forever. So yeah, it was a really good weekend. So
That's exciting, man. I'm proud of you too for your job.
And God bless America. Happy belated 4th of July, everyone. We're
right, happy 4th.
Just 2 days past the 4th now. But in my opinion, July should just be Independence Month, not just the day. But that's just me. So, alrighty. Dustin, thanks for putting this together. Thanks for recommending the book, putting the notes together, challenging us, and leading us through this discussion. I hope that for the viewers, this was beneficial. I definitely learned some things tonight, and now I'm going to be texting you nonstop about where to put my money. So
not financial advice.
That's right. Yeah. I'll just you know, I'll set aside play amounts of money that aren't going to have you know, any kind of detriment. And hopefully, I can do some things with it. But yeah. So
there you go.
Appreciate you, gentlemen. We're almost at 2 hours for this episode. So thanks for your time and investment. And we will see you in, actually, it'll be about 3 weeks before our next episode due to my training commitments. So we'll be back in a couple weeks talking about Tender Warrior by Stu Weber. And until then, gentlemen, have a great couple weeks, and we'll see you soon.
See you, fellas.
All right. Take care, gentlemen.
Thanks, brothers.